What what is a Fibonacci? A Fibonacci is a retracement too. And the best part of using a fib is it it can give you entries at any given point in a trend. Now, with the way that I've taught you that market moves giving us highs and lows, highs and lows, highs and lows. But imagine right now, like let's see on this trend that we are seeing right now here. I think we did this yesterday with my private class, is it? Yeah. And it's actually playing out the way that I told them it would. I didn't intentionally mean to open this pay. By default, it opens. So I'm just also remembering that I can also show you the fib work from this pay alone as well. So imagine we are in a scenario like this, and us being in a scenario like this, we are sure that we are in an uptrend, but we don't know where to buy or where to sell in this uptrend. The way that I've taught you is you first mark your highs, lows, and see where your market structure is going. Now, for me, the second most important thing that I do is I take my fib out. And when I take my fib out, I just don't take it for the sake of it. I take it out to see where my retracements or where my next reaction points are going to be at. So, okay, I'll come back to this pair. Let's go. This one is too easy for me to show you right now. Let's go to another pair that maybe we can just click looking aside. All right. So, for example, here we have Boom 900. Right. What you see on Boom 900 is basically is downtrending, right? What we had was we had a high, a low, a high, a low. But remember, in our mindset, we know that we are already downtrending, right? But currently, what is our Boom 900 doing? Currently, our Boom 900 is showing that it's buying, right? But it's not going to buy forever. It's not going to buy forever. And we know that it's not supposed to come and break this high, right? So somewhere within this trend, there has to be a point where it has to come, bounce, and continue going up, or continue going down. So this is now where the fib comes because what we're having here is an impulse. Now this is a correction. We have an impulse. Now we want another correction, right? So an impulse is the main move, and a correction is the move that just lets the market breathe before it continues going down, right? So let's do this. Um, sorry guys, I'll start picking questions very soon. So now now knowing that this is a retracement, we have to know where it ends. This is where the fib comes in place. The fib, what it's generally there to do is it's there to measure where our retracement is going to end. So, like I told you, if you are in a downtrend, you take your fib, right? And then you touch the previous high, going to the previous low. What you're basically doing is you move in the direction that your overall market direction is going. I've seen many people go like this. They just come, pull out their fib, and then they take it from the bottom going up. Like, why would you do this if your market is going down and then you're going in the reverse direction, right? What it's going to do to you is it's going to give you wrong entry points. Instead of you entering here, you're going to enter here, and your trade is going to pull you up, and automatically you're just wrong in the beginning of the first place, right? So this is what I need you to put in your mind. whenever you see your price going down, you drag your fib from the top going down. Whenever you see your price going up, you take your fib from the bottom going up, right? So let's remove this here, right? Let's remove it and let's remove it again. Now, this is a daily time frame. I think we can also see this is a 24-hour time frame, but the market is fractal. What do I mean when I say the market is fractal? Anything that you see in 24 or in D1, you see it in H4, in 2H, you see it in M30, you see it in M15. So you will actually be in the right direction if you take your fib going down in that time frame. Right. And then now what do we need to know? What we now need to know is most retracements, they happen around the 50, the 60, and the 71. Here is where most retracements happen. Right. But you're not just saying whenever your trade comes to the 0.50 and then automatically you sell straight away, or when it comes to the 0.618, you sell straight away. Remember, I'll always repeat this. This is what's making some of us prosper, or some of us start to see more blues than reds. We always follow market structure. Right. For me, it would make perfect sense that in my daily time frame, my Boom 900 is going to buy up to the 0.618% or 0.71% ish region. Why? Because now we want to start adding things within our market that make sense. We can all see that this is a gap. Prices to get filled in this gap. This is a gap again. I think we can also see another gap here. Prices to get filled in this gap. At the same time, we have an order block that's here. So price is bound to come and reach and react in these levels. Right. So let's say I'm basically just analyzing this pair. What I'll do next is there's these 2 hours. Most guys skip them, but I found them to be helpful. And recently I found that my H2 is something that I need. I don't want it, but I need it. So let me jump to my H2. Right. We are just trading using a fib and it's it. So what do we see? What we can see already on our Boom 900 is it is broken structure here, right? I think we can all agree. It has broken structure in my H2, and at the same time, I have a change of character. So now I have two things that support that this is a valid low and this trade is going to correct. Although in my larger time frame, I'm in a downtrend, but the 2 hour time frame, we can even reach up tomorrow before we react in this area. But buyer and consolidating, buying, right? So someone would ask now, if you get to a point where you have a low, this is now a valid low. This is where most people get stuck. Okay, guys, hey, Forex Tona Kizamuza, I didn't, I don't want, that's not, I never thought to just cover stage, but let us go. Let's go. Let's go. I told you about liquidity and it here, Tawea, we've grabbed liquidity, we've wicked in that zone, we've made a high, we've made a low, but this low is now our new valid low. And this being our new valid low, what would I do? Is if I'm the one who's trading, what I would basically do is I now know that this is my high. I take another fib. I'm expecting kuti price yangu for now ibuy, but in my larger time frame, I'm expecting kuti isele. So I'm going to take my fib from the bottom going up. And Now, what I'm expecting is I'm not expecting a retracement in this 2 hour time frame. Could trade retrace break and then give me a low, which doesn't come and break this low since this now is my valid low. So what can I experience in smaller time frames? What I can experience in smaller time frames is highs, lows, highs, lows, highs, lows, until we reach those retracement areas. Cheat ndinofana kuita. What am I supposed to do? Okay, Segula, you've taught us that the 0.618% ukasvika, you're supposed to go there and react, or maybe at the 0.61, 0.5% ukasvika, you're supposed to see a reaction in the reversal. What we expect with this, we expect price to reach those levels, giving us market structure, a proper market structure with highs, lows, highs, lows, and it's it. So let me move this so that it will make sense if I use this editor to show that is so I would expect to see highs, lows, highs, lows, highs, lows in smaller time frames, highs, lows, highs, lows. And then when I reach the 0.618%, I now want to see my breakout structure or my change of character. Soon as I see them, what do? I start buying straight away. But why am I buying if I zoom out? Okay, let me see. Mr. Emmanuel, you can talk. Is there a problem? Mr. Emmanuel, I've muted you.
Hello, Sekuda.
Yeah, I can hear you now.
Okay, I was saying audio iri kubuda zviri fani fani.
That's very
I don't
funny.
know, maybe mhino zvariri kuita. I don't know, maybe kuside kwangu chete kana mhino vangu kana vari kunzwa the same.
Okay. Just hold like that.
Okay,
That's probably a thing, but I think I know what the problem is. Just hold like it.
okay.
Oh,
What about now? What about now?
I can hear you clearly now.
Okay, wait. You can hear me clearly now.
Yes, I can hear you clearly now.
Right. But you were hearing everything that I was saying, is it?
Yes.
Even yangu audio payanga yakadhakwa. Mamuchingozana nanishaura ndizvo.
Yeah, zvazvitaura but zvazvingori inowa mhino kamwe kanigiri kangori fani fani.
Okay, no
Okay,
problem. But are you
okay.
understanding?
Yeah, I'm getting there. I'm getting there.
All right, it's fine. No problem. Thank you.
Okay,
Thank you for
okay,
that. Thank you for that concern. It's
okay.
okay.
Oh,
Okay.
sure.
So most probably when we post this on our YouTube channel, it's gonna sound funny at first. But anyways, it's okay.
Okay.
Anyways, it's okay. Okay, so now what we do is tikatarisa. We are now back in our 24-hour or our daily chart. And now what you see on our daily chart, like I said, when we used our retracement tool, we actually saw that this is a low. And the creation of a low means that we need to have a new high and it's got. So that high now we want to know where it's gonna end, and we said around this area between the 0.50 and the 0.718%, and it's 0.71%, sorry. So what does it mean again? What it means again is tika tarisa for us to wait kuti trade risvike uku. Tangomirira, just waiting for it. It's gonna take us a long time. So now, since we know that we now have a valid low in our daily time frame, we need to come back to that small time frame, to those small time frames, which is why we went to H2. And in H2, what we see is we've already had a change of character and a break of structure in H2, which signals us that at any given point in time now, we're supposed to be buying, but we're buying so that we reach our fib retracement level and then we sell. I hope it makes sense to you guys, right? So us having broken lows and highs in that smaller time frame, we now see that we have a new high, and the creation of a new high means that high is to have a low. So that low now, we have to measure this retracement most probably chapter up. And it's logical for us to say chapter here around these areas. Why? Because we have a gap here that we have to fill. We have another gap here that we have to fill. So they correspond to the 0.618%. So in our smaller time frames, we expect market structure to flow down and it flow. And then you notify either change of character and a break or a break of structure straight away. And then we start buying it. It would be riskier to tangera up. Why? Because this is a high that we can actually see it's a high that has been made, but in 2 hour or in H2. So we've used the fib in two ways. We've used it to measure this downtrend move, which is in 2 hour, and this downtrend move is actually a move that is supposed to give us a buy that will retrace in the 0.50% or 0.71% of the daily time frame so that we are able to sell it since our larger time frame is selling. I hope this is not rocket science to some of us. Because if it is rocket science to some of us, trading such as guys, this is stuff that you should keep to heart. So far unapenda pamoyo, mfano nezo zibata pamoyo kuti you have to master this. And it's so let's look at another pair, which will most probably be my last pair that I'll do. I don't know which pair to choose now. Okay, let's do a currencies pair. Someone yesterday was complaining kuti tikuwanza kuita mavolatility. So this is Euro GBP. And what we can see on Euro GBP is we were pretty much downtrending, isn't it? On our 2 hour time frame with a high, a low, a high, a low, a high, a low, a high, a low, a high, a high, a low, a breakout structure here, right? So we now know that this is our breakout structure on our Euro GBP. I would want you to write this down or just take a screenshot of this. I don't want to wake up in the morning or time I'm gonna do what I told you, and then you'll be like, where's the evidence? I know some of you want evidence a lot. So straight away what I'll do is I know that I have a valid low which broke structure here. So I would come, put my fib, take my fib, go up with it, and according to what I taught you, we came reacted on the 0.71, 0.68, and then you now see that reaction. So straight away, what you know here is we are supposed to shoot up, get a high, get a low, get a high, get a low. So basically, this one, just by knowing that I've broken structure and I have a valid high, I have a valid low. Now what do I know? I know that I have to buy. And I'm not just buying, and I'm buying. Why? Because, okay, there's something that I forgot to do here. Let's move to M15. Now, what I see in my M15, I want you to Everything that I was teaching you exactly as it is, I want you to put it, to remember it. I said, to know what you're supposed to have is you're supposed to see our market structure, come to those areas nicely. And it, so what do we have here? We have a high, a low, a high, a low, which we here, a high, a low, a break of structure in that M15, which again signifies that we are buying and it. And if we have a break of structure in M15, we have a low in M15 and a high again in M15. What do? We are in a fib. And it, what we can do is take another fib and put it again. And what do we see? We see that when price came exactly to the 0.618%, just came wicked into it and now it's buying. You know, I always say forex trading is something that you can't afford to lie to people because there's always something that you need to prove. What you're saying, is it or not? So basically, on our Euro GPP, we know that we're going bullish. Any questions? Any questions, guys? Samuel, you can ask.
Hello.
Hello?
I wanted to ask, on the H2 time frame, do we use M15 or M5 for entry points?
All right. On the H2 time frame, basically what I do is when I take a trade in H4, I use an M15. I enter an M15. Just as much as I take a trade in my H2, it's almost the same. Even if we try, let's say, let's go to M5. We are now in M5. Can you see?
Yes.
What you can see in M5 instead of, okay, I really want you to get this clear. If we come to M15, let me go to M15. In M15, come on. In M15, what you're going to see is straight away, you're going to see a break of structure. Can you see this break of structure over here? Here.
Yes.
Can you see it? Yeah.
Yes. Yeah.
But if you come to M5, straight up, you're going to see what? You're going to see a change of character and a break of structure. Can you see it?
Yes.
So now it depends on what you really want to use. If I'm
Okay.
if I was entering using M5, my entry was gonna be here. From the onset, my entry was going to be here. But if I was using a breakout structure, my entry was going to be my first entry somewhere maybe around here, and then when it retraces, it to come around here.
Okay. So wouldn't it be safer to maybe scale down to, like, for example, the M5 to maybe try and catch like a sniper?
It now depends with your style of trading. If you're an aggressive
Okay.
trade, if you're an aggressive trader, someone who's very much mechanical and who doesn't want to miss any entries, you'd go to M5. But if I am someone who
Okay.
was trading using my larger time frame, which is M15, which is larger than M5, I'll just stick to that and say I want a safe entry, I want a confirmation, and then let it buy. Because remember, the person who enters first is this guy who enters with a change of character in M5,
Yes.
and the person who comes second is this one. But this one now is risking. What if? Now ask yourself this question. What if this was just a change? Because a change of character doesn't mean you've broken structure or you've changed direction. It tells you that we are about to change direction. So what if you are this guy and then you buy a bit and then it comes and breaks this low? That means your market structure will still be valid even if it goes in your opposite direction. But just because you wanted to be a bit risky and you saw that your price told you that you know what, I'm about to sell or I'm about to buy, you entered early. It's just like this person here. This guy over here saw this change of character and then bought, but then we came again, broke structure, and then he sold.
Okay. Okay.
So now
So
that's the, So now
For
that's
other
the
instances, the break of structure, what if the market breaks structure, right? And then it just like continues buying like straight away.
it's very much possible. It's very much normal. It's very, 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 very normal. Yes.
So it's safer, for example, I got my change of character and then I wait for break of structure. Then I do the second fib again on the lower time frame. That would be a safer bet.
Yes, it would be a safer bet because you are just like the same person who ended up choosing a change of character, his or her entry point. You're going to still get it, but yours is going to be very safer. The amount of stress that this person goes through and the amount of stress that you go through are different.
Okay. And also, using the H2 time frame, should I always start from like the 24 hour or
All right. Which time frame you start from? It depends on you specifically and how it's going to help you understand the market. In any case, for me, sometimes I struggle a lot just by starting in small time frames. So I want to see the very, very bigger picture of things so that I don't do any guessing. So that question is more of like your how you take it personally. Are you someone who can work with H1 straight away and be okay with it, or are you someone who likes to see things from a broader type of view and then start scaling down?
because
Yeah.
from your examples, I'm actually liking the starting from the 24 hour going down, and I think I would like to practice that type of
Yes,
analysis.
yeah, top-down analysis, it will always, you know, get you to a point yokuti awuiti nje kufembera.
Okay, okay, that's all for now.
All right, that's fine. Willard J. Chikwanda, you can talk. I've asked you to unmute. Mr. J. Chikwanda, you can talk.
Jose.
Yes, how are you?
Good evening. I really appreciate. I'm starting to have a big a picture right now. Thank you for your lesson, sir.
All right, thank you a lot. I appreciate.
Yes, much appreciated, sir.
You're welcome. You're
So,
welcome.
yes, yes. I have a question, sir. Before we end this,
Okay.
I just want to know how you can set TP and as well as stop loss. Maybe if you can help me on that one.
All right. Our standard. Okay. Okay. Let me. You have background noise. I think it's too much. I don't know who has background noise here from the guys unmuted. So as for me, the ways that I set my TP, let's say I've decided to take this entry, right? Like now, no, 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 no. What I know is my entry is supposed to be just exactly where we are, because this is happening in real time, right? So say my entry is here. I decide to take an entry here. My stop loss is always going to be on my previous low, which is here. This is where my stop loss is going to be. My stop loss is always going to lie around here. But to avoid being wicked, I look for the biggest candle that's around this area. And what I can see is, I think it's somewhere, I think it's this one before we broke that structure, right? So what I would do is I would again come shift my stop loss, measure that distance, and then from that very same candle or from the lowest week, I would come and place my SL like this. Right now, so I'm assuming that I've taken a trade. Now, let's go to the actual time frame, which is our M15. Where's our M15? Our M15 is here. Now, knowing that I've broken structure here, I would take my entry here. I'm showing you using different time frames and what you should consider, right? What I'll do is I'll also look for the longest one in this range before I broke structure, which is this one over here. So I would measure it, right? Come and then just do this, and this is where my stop loss is gonna be in my M15, right? So this is my stop loss, and let me remove this one from the 2 hour because it might vex other people. So that's my stop loss. So if I want to get a bit fancy, that's when you see me putting this, right? Like this. Now for my take profit, what I usually like doing is I like moving back my charts, and what you can see is this eye was taken out. The next eye that wasn't taken out from my charts is this eye. I think, can you see it? This eye over here. Okay, can you see this eye? Okay, can you see this eye? Okay, I think you've muted your mic, Mr. J. Chikwanda. But my next take profit is gonna be this eye, and then my next one is gonna be this eye. If price decides to push further ahead, it's gonna be this way. So what I'm basically targeting is previous highs. What you see here is we've taken these highs. These highs have been taken,